Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today and futures down a little bit, but within about the first 15 minutes or so, support one held. If you don't see the quick charts that we post up every day now also at around 9 o'clock, the 60-minute spider chart, you should take a look at it. Gives you a nice little map of support levels. And spiders held the previous day's high, went from negative to positive, pushed through one pivot, failed at another. But overall, you look at this chart, and to a technician, there's a lot to like here. It's funny, I was talking to a few of my friends during the course of the day, them saying every analyst in the world hates the stock market. On CNBC, the hedge funds were talking about how guys are going out of business, guys are blowing up, because nobody wants to be long the stock market. They all want to short at the stock market and be long gold. But anyway, technically, there's been a lot of patterns here to show what goes on, where if you don't look at the news, you can maneuver from this head and shoulders top, giving you a nice measured move once it broke below, couldn't get back above, to then you had the pivot low below the 200-day. Then you had this, nice little inverted head and shoulders pattern that wound up giving you, a decent move. And then recently we've been talking about how this, new ascending channel, you have the low, higher low, has been pretty, been navigated pretty well. Okay, then today, we came in and we weren't sure what would happen after yesterday's whipsaw session, and we pretty much crossed above this downtrend that's been controlling the market almost since what, April 2nd or so. But P.S., at this point, I saw a lot of bullish notes going around at the end of the day, and to just start initiating new net longs for an additional move here after a 100-handle move off the lows and a 40-handle move off of last Friday's J.P. Morgan news, I don't think it's that prudent. I don't think you should be stubborn and hopefully rolling up shorts, and at some point a little bit higher you're probably going to puke them out, and then that might give us a pause. But overall, market's acting somewhat well. We came in today, just another example of the media and an example of how you have to really know what's going on in stocks. Every newspaper around the world read how, Intel met earnings, guided lower, Intel says PCs are slowing, blah, 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 blah. But really, stock already knew that. It went from 29 down to macro support, was down 10 cents, and then closed up 3.5%. If you look at Intel, it wound up engulfing this entire move and had a nice day. Okay, so the real headline should read, if you're a technician, stock failed a breakout here back in April, your sell signal. Another sell signal was when it broke this trend, just came in pretty significantly from the highs. It reported earnings, not great, but it's already been taken out of the stock. Buy it here, don't sell it. I'm sure a lot of retail guys out there were selling the stock into today's move, and now they're like, oh my goodness, how did it close up 3.3%? Doesn't mean that it's going to start a new run, but just tactically, these are the things you have to learn. So it took back some moving averages. We'll see if it could hold maybe 50% of this range moving forward, and then that's how we'll know whether or not you could stay with Intel. Wynn wasn't as lucky. Wynn gave you a quick move off those lows and then started to fail towards the end of the day. I'd be a bit careful with Wynn that in the coming sessions, if it starts to break below this 95 area, 95.10, 94.59, you could see lower prices. VMW opened up 5, went up 10. Good to see that you have some follow through on a gap and go type situation. That stock also battered and bruised, really crushed, and it closed pretty well. Overall, tactically, you had the failure up here. This actually was really good earnings. And they sold it. So it shows you, I remember people were scratching their heads last time saying, oh my God, wasn't their earnings so great? Why did it close lower? Because that's what the market does. You have a huge move leading into an event. The event's priced in, it changes. Here, it actually wasn't so bad. So it had a nice move, and now it's coming right into this trend line. So here too, we'll have to see, what area holds moving forward to see if it's worth staying with for, more upside action there. A lot of stocks in the OAHs started to act better tactically off the lows. We started talking about it a while back. Once you had this reversal here, this was not a prudent or a potent reversal, but you had your first move. Then we held higher. This gap stayed intact. And now it's pushing above this little lower pivot area. So at this point, stocks within this group, I know guys made some money on the site today. They were talking about how Hal had a nice wide range bar day right here. Okay, so people made some money right there. Here is your low, higher low. Granted, if you've been holding Halliburton the whole way down, it hasn't been fun. But if you tactically got involved, maybe on this potent move first, it couldn't get through it, pulled back, held a big portion of the gap. This was a nice reversal day to get involved. SLB also started to act a little bit better, well off the lows. Pushed through a lower pivot trend line. That's why we isolate these also, because for tactical trades, people get squeezed who trade against them, and then you also get some follow through. We first started to see that type of stuff with the MU, that's been acting very well. You have CF at new highs. We put this on the list so many times and off the charts as a potential leader in this group, and here you are at new highs. This is when this crossed its lower trend line. Okay, yes, it had a big pull in. This is when it came out with earnings and failed. So if you sold it well here on this day or on this day, it also broke this trend line. You could have waited, not been involved, and then once you cross this small trend line, here is your buy, here's your retest, there's continuation, now you're at new highs. So tactics. Monsanto also, decent at new highs. I'm not even gonna get into that, looking good. And then on the weaker side, you could say Lennar is getting a bit faulty up here, but so if you were long anything more than a tier 1, tier 2, you probably want to be a bit careful, considering that it's come a long way. Market's trying to rally, it's not really going. I wouldn't say it's game over, but if this thing were to break below 29.65, I would use your high level stop. Same thing with Toll Brothers. It also, not really, failing, no real concern, but it's taken a long time, very iffy or wishy-washy up here. So, here's your upper level channel. If it doesn't get through here soon, it could be prone to a little bit of failure. So make sure if you're not committed to the stock, your stop is at 28.40. IBM came out with numbers after the close. It looked like it was up a little bit. You look at the size of the move down in IBM today. A lot of guys on the site started playing it because they figured a VMW could go up $10 maybe. Shorts get scared here, so it give you a nice move pre-earnings. If you didn't take it into earnings because that's not what you do, that's fine. We'll see how it acts, once it gets back into this 191 area. Qualcomm was getting hit after hours. But this stock's been so battered and bruised. I think they're going to try and price it in. I'm not sure if they're going to be able to. Stock, they squeezed a little bit into the close, and now we'll just see what happens tomorrow. It's going to open up down. Maybe it reverses. It's a hell of a way off the highs here, so we'll see. I know Apple was down a few bucks in after hours because the handsets or whatnot, from Qualcomm. So people are saying iPhones might be a little bit in trouble, but I doubt it. Anyway, it's down a little bit after hours. I'm long some. We'll see how it handles. Maybe this zone tomorrow. But if you guys remember with Apple, I remember last quarter, AT&T reported earnings maybe the day before Apple, and they were horrible, and everyone got so negative on Apple. Then meanwhile, we all know what Apple did. It went on a tremendous run. So don't be scared out of your Apple position because of Qualcomm. Maybe you shouldn't have huge size. They could definitely still do a few things with that, before earnings. And then you have to also figure out whether you want to be long into earnings if that's what you do. But if you're a macro investor in Apple, you do not sell it because of the Qualcomm news. All right. I think into the call, you could sell some in the money calls. You could be a little bit hedged if you want to have a little protection. But I wouldn't just get all emotional because of Qualcomm. Who knows? They might even have it priced in. FFIV also came out after the close. Wasn't great, but I think it was up a little bit. A lot of these things that have lowered expectations and are even not, some of them aren't even meeting the lowered expectations, and they're still going. But again, you look where FFIV came from. They did a good job discounting it into the earnings. So anyway, at this point, it's hard to chase the market, but you don't just be a stubborn short fighting it. It's definitely all stocks are created unequal. Some are acting better than others. Lately, the financials, even though they've had some decent, decent reports, but all considered crappy because of where they're getting their earnings from. A lot of them are stealing from their reserve requirements or whatever that whole situation is. PS, they're not acting great. Goldman's been a sell since their earnings. Remember we talked about 99, said if it could hold above there, maybe get some follow through. Well, it didn't hold above there on earnings day. Now it's came in a little bit. If it really starts to give way here, I have a feeling the banks are going to get a lot more pressured, so we'll see. JP Morgan also not really doing much since their earnings. still in this lower pivot. You still have this trend line that it can't get back above. If it starts to break this area to the downside, that probably will give some clues that the market might not be able to hold up and continue this move that it's had. So, I would say watch JP Morgan and some of the banks in the next day or so, because I'm not going to be here. If they start breaking lower, we could get a push-through failure in the markets. Some of those home builders that have been strong are starting to be a little bit faulty. I know people are talking about IYR. That's actually no big deal right there. It's just at the highs. Well, what are the transports doing? IJT. Small cap growth. That's all right. IYT. Not breaking out yet, but still in this whole range here. So you still have your wedge. So at this point, it's it's kind of not what's the word? It's like inconclusive. Because you could get a push through failure, or you can push through and we can keep going. Same way with the spiders. Today, you had a push through this trend line. It wasn't explosive, but it held above it, and it still looks like it's in the game. Everyone wants this market to fail. Nobody wants to be involved, and that's typically when you continue. So with that said, just keep taking tactical trades. It's the summer. Don't do too much if you're not seeing it. If you're conflicted in your mind, just trade what you see, not what you think. A lot of smart guys say that out there. I try and say that every now and then, and just do a little less. Don't get frustrated. I got a little frustrated today because I was trying to be net long. It's not an easy time. I'm cutting off emails. I'm cutting off analysts. I'm just going to go back to looking at the technicals and calling it the way I see it versus the way other people think they see it, because lately, as things get more complicated, you feel like you have to read more, you have to know more, you have to know about the approval process for Germany. If it's going to take 3 months for their approval, you have to know what kind of parliamentary procedures they have over at the Bank of England. But we don't need to know that. Either stocks act well and go up, either stocks go up on bad news, or good news they sell. Charts start breaking lower. Either stocks are above their moving averages, showing relative strength, or below them. As a technician, I think it's easier to see what the charts are telling you versus listening to what others people think and what they write about. Anyway, I got to jump. Sperling's going to be doing the morning call with Lindsay tomorrow. Laz is doing stock twits with Taylor. And then I will be on the road tweeting from time to time, and I'm going to a wedding in Florida, so it's not like I'm out of the country, but I will have a little bit of limited access, but I'll be around. Have a good night, and I'll see you in the morning. Have a good day. Good night.